This is Richard Flex at MoneyFarm, talking about some of the things that have caught our attention over the past few days. Two things really to touch on. The first, in the world of central banks, we've had commentary from both the US Federal Reserve and the Bank of England, both keeping monetary policy unchanged, both highlighting the extraordinary economic times, and both really committing to using monetary policy to try and support the gradual economic recovery. In the US, there was a bit of emphasis on the need for some more fiscal support, at least in view of the Federal Reserve. And in the UK, commentary firstly around the possibility of negative rates, that was something that the Bank of England was looking at in more detail. And also quietly highlighting the possibility that if you did see a no-deal scenario in the Brexit negotiations, that this would require a re-evaluation of their economic forecasts. From a market's perspective, perhaps markets were looking for a little bit more in terms of concrete support from central banks, but it still seems pretty clear that the monetary authorities stand ready and still willing and able to increase support should they feel that it's needed. And the second point is really around COVID-19. We continue to see the number of daily cases rise across a range of developed markets, particularly in Europe, and the possibility of another lockdown, temporary lockdown more broadly, is something that's coming under increasing discussion. Clearly, if we did see that, that would set back the economic recovery that we've seen over the last few months. And it's something that financial markets will need to take in stride. So that's something that we'll continue to monitor quite closely. But it is a tail risk that seems to be rising at the moment. Thank you very much for joining us, and look forward to speaking to you again soon.